those of you guys that are regulars for the live algo hour, today is our open house day. We're planning to do this like once a month or so. Right. So don't be shocked if every once in a while there's a huge amount of people in here. Right. I looked at our Zoom today, it was like 80 people signed up. I was like, holy crap. We'll see how many people end up showing up at 20. That's a decent amount already, which is great. Okay, cool. But let me explain the concept to those of you guys that are new here. So essentially what we do is we do this every week. Every week on Tuesday, we have this thing called Live Algo Hour. This week, we're doing an open house. We plan to do an open house something like once a month. All right. So if you guys want to join, this is how you can join on a consistent basis. Today, we'll go through a bunch of stuff. If you want to get the code, you're going to have to get one of these plans, right? Or if you want to join us on a weekly basis, you're going to have to get one of these plans, okay? And that's either our pro plan, which you can go on our website. It's right on the front page of our website too. Bluewealth.com/pro plan, or just go to our homepage and just click on pro plan. Basically, you get this class here. You get the live algo hour with code. So not just what we're doing today, going through it all, but you're also going to get the code, right? And I think that's an important distinction here. You're going to get workshops. We do workshops on a regular basis as well. We do ones to basically help you set up your first algorithm. We're going to be doing ones with for options. We're going to be doing ones for AI in the future as well. So we're going to be doing a bunch of workshops in the future too. So you guys get a part of that. You also get our trading signals, which is this right here. You can basically watch our algorithms as they trade. So do you want to invest in one of these or not? All right, here's like our breakout one. This one hasn't done anything for a while. Congress. This one's been going up. Diversified leverage. That one got kind of hurt. Passed a little bit. Crypto B bands. This one's been up. Right. So you basically watch them. Right. So if you ever want to run any of our algorithms, you can see them first running live, and you can be like, oh, do I want to do this or not? We're eventually going to add a nice little button here that you just click on it and like run it yourself, right? Make it very easy. But yeah, you'll get the trading signals. You get access to our Discord community, which is very, very lively. So if you ever need help with anything or have questions or just want to chat, Discord's there. And you also get access to our Python for Finance course, which teaches you kind of the basics of, how to use Python in the finance world, right? That's our pro plan, or you can go all out with our top tier plan, which is our all access plan, and that's you get everything inside the pro plan, plus you get access to all of our courses, right? So we have a bunch of different courses: algo trading, options trading, AI, blockchain. We have a bunch of stuff. You get access to all of those courses. We're going to do starting next week. We're doing weekly office hours, where basically it's like 2-3 hours of whatever the heck you guys want to work on. If you want to show up to office hours and just say, build me a bot, we can do that for you. Or if you're stuck somewhere, we can help you there. Whatever it is that you want every week, we're going to have that. And you also get one-on-one sessions every week or every month, 2 hours of one-on-one every month if you want that, right? So those are our pro plan and our all access plan, right? If you want to join this stuff and on a more permanent basis. Okay, so what exactly is today? So let's talk about what we're going to be covering today, and we'll walk through the whole thing, right? So it's really 4 steps. First step is creating or people presenting their trading ideas. You'll see that in a second. Then we'll do a vote as to what algorithm you guys want to have built today. And then we will build the actual algorithm itself. And then we'll do, if we can get it in enough time in, then we'll tweak the algorithm. We'll try to improve it over time. So basically, by the end of today, you'll see an algorithm being built from beginning to end, from the whole ideation process at the beginning, all the way up until us tweaking it and building it. You are not going to have to code anything. If you guys are thinking you have to code, you don't have to code. You're going to watch me code, right? At no point actually do you even have to code anything within our classes if you don't want to. If you do want to, we do a lot of cool stuff. If you don't want to, you don't have to, right? A lot of the stuff that we're doing these days is really just done for you. Like this class, for example, I'm going to be coding for you. You can just use the code, right? But yeah, that's basically it. So let's go through each one of these. So first thing we're going to do is we're going to do trading idea presentations, right? And for those of you, does anyone here have an idea that they'd want to develop, by the way? All right, does anyone have an idea that they want to build today? A trading algorithm they want to work on? Okay. Well, think about it for a second. If you guys want to have any kind of algorithms built, if you have a trading strategy that you've been doing for a while and you want to automate it, or if you've like looked up a strategy online, you're like, oh, this thing seems like it's a really good idea. Let's test it out. Let's see if it will work. Or we could even take something that we've done in the past and try to improve it from there. Either way, if you have a trading idea, let me know, put it in the chat or raise your hand or whatever, and you guys will have a chance to present your case to see if the rest of the crowd agrees with you that we should be building it today. All right, so feel free to submit your idea. I see someone here. Greg G says, how about a break and retest algo? Sure, Greg, if you want to work on something like that, we can take a look into that. You can present your case as to why you think we should be building that. Jonathan says options trading for SPY, flag pattern. Okay, sounds good. If you want, you can present your case and we can see if everyone agrees with you. That's a good idea. So both of you guys hold on to those ideas. If you want to do these, maybe try to get like a web page up or something to show us like why you think this is a good idea, right? And you can kind of walk us through what it is and why you think it would make money. All right. So we got 2 ideas so far. That's great. And for the rest of you guys, if you have any other ideas, let me know. So we'll first do that. We'll have those presentations. When those presentations are done, I'm going to send out a vote. Everyone's going to vote on which one we work on. And we'll pick one and we'll go with it. And then whoever is the person that basically had that idea can be the one that drives, but everyone else will also have a chance to be a part of it, right? So when we build this thing out, right, the person who had the idea, they're going to be the drivers, right? And then even though the owner of the idea gets to drive for the most part, if anyone else has ideas, if you guys all think like, oh, what about this and what about this, you guys can contribute as well. All right. And then by the end of it, once we have this thing done, then we're going to tweak it. We're going to stress test it. We're going to try to modify it. What if we did this? And what if we did that? What if we changed from, 10 SMA to a 15 SMA or whatever the algorithm is, we'll try tweaking that. All right. Okay, cool. And once again, if you guys want to join, if you want to participate in this on a weekly basis, you could join either our pro plan or our all access plan. And also, if you want to get access to the code of all the stuff that happened today, you're going to have to join one of these as well. All right. Okay. So that being said, let's get some presentations going. Okay, Greg G says, I'll not be able to do a presentation, so you can go with the other idea. No problem, Greg. It's up to you. You don't have to do anything fancy. Just to let you know, you don't have to get a PowerPoint out or anything. This is usually very informal, right? All you got to do is just say, oh, this is kind of what I'm looking into, and share your screen and just kind of walk through it. But you don't have to do anything formal, all right? So don't feel like that's a requirement here. This is not business school. This is we're just we're just informally showing ideas, right? So that being said, we have 2 Johns here that have ideas. Do you guys want to present your case for some of these strategies?
Sure. I could.
Mhm.
Yes, I'm gonna share my screen. I'm actually going through a like course on trading that I paid for. I've been trading a lot on a demo account. So I'm gonna share my screen if that's okay.
Yeah, go for it.
So let's see. Sure I'm opening the right tab. Okay, here we go. So, yeah, wait, I think I'm in the wrong section. So there are different like kind of patterns I went through. Or like one of them, a common one is the flag pattern. Um, sorry, I thought I had it, but let me just, I guess, kind of go to a chart I can kind of share, um,
Sure.
kind of some examples. So basically, you kind of look like if it's a trending market, like when you see it push up, and then come down impulsively. Um, you kind of look, it kind of uses the Fibonacci tool. They had like a certain way they set it up. But for example, like right here, I saw it was kind of like impulsive. It starts to come up a little bit this way. You'd place a trade like here for a sell and it would go down. And this one hit it, right? Um, I think this is the one I had looked at earlier. Um, so yeah, I'm not super put together, but you said that's right. So yeah, it kind of pushed up. I look, they call this area like the kill zone where you'd want to enter, like where it got to like a full uh retracement back, like it kind of comes down and comes up here and goes down. Um, so I don't know if this is making sense. I feel like I'm all over the place, but
It's making sense. It's making sense. So tell me then, I guess, I guess I have two questions. So first of all, how do you know about the entries into the flag pattern? Because I could see here you're plotting out your exits using a fib, right? Like that I can
yeah.
see.
Hmm.
But what constitutes an entry? Like, what are we looking for to enter into this?
Yeah, so in an entry, what I'm looking for is like if I had a strong impulsive move that like left some they call like imbalance. I'm looking for like it to start to kind of pull back to fill that imbalance. I don't see any super good examples yet, but I think I had one the other day here. So I'm looking for like I think I had an idea here that didn't totally work out. So I think I was on a lower time frame. So look, so I had an full right here. So I had an impulsive move down, and so it started to flag back this way. So I'm looking for impulsive move and it's starting to flag back, and I'm looking for close to the impulsive move. Specifically, I set the fibs here, and I'm looking for like somewhere around like uh 0.786 or somewhere like in these levels to enter because I'm looking for so impulsive move and I basically want to enter near the start of that impulsive move, especially if there was a push up right before that. It starts to flag back into here. I look for that to the entry and then it comes down here. And then sometimes I kind of set to try to go further if there's like a key level here. But notice here it just hit that, went this way. And then I would want to, after it goes a certain amount, I would want to put my stop loss and profit. So like this second one shows like once it got past this level, I kind of moved the stop loss and profit. So if it turns the other direction, because it's a pretty good risk to reward, if it comes back, I still made some profit. Does that make more sense?
Yeah, that makes sense. So let me just repeat it back to you to see if I'm understanding it correctly.
Hmm.
So it seems like you're looking for an impulsive move, either up or down, right?
Hmm.
And then it
Right.
basically retraces back to the beginning.
Hmm.
And when it gets back to the beginning of that impulsive move, then you're basically betting on it to continue in that same direction again,
Yeah.
right? So in
Yeah.
this case, it dropped down and then slowly crept back up again. And when it got back to the beginning of before it dropped down, that's when you enter.
Yeah. Exactly.
And then you wait for it to go
And
down.
it doesn't have to go all the way back to the entry. I realized it might be good if I go to like my trading journal. Like I had one here. Um, yeah, so I saw this. So I guess yeah, right close to the entry. But it doesn't have to go like all the way. I usually do like a little bit above. So especially if there was a down candle right before the up candle, I'll put the entry at the top of that down candle. Does that make sense? Or vice
Yeah,
versa.
that makes sense.
And so that's kind of the strategy. So this one, it hit it. I ended up closing early right there, but it ended up going up pretty far. Um,
Nice.
I just closed early because the weekend was coming. I was nervous. But yeah,
Okay.
that's the strategy. So entry, so specific strategy for the entry is I look for like a small down candle with a big impulsive move up. The entry is right at the top of that last down candle before the impulsive.
Okay. Cool. Okay. This actually seems like a pretty simple strategy.
Yeah.
So okay, so I feel like I understand that. What makes you think that this would be a good strategy? Why do you think this is a good way to make money?
When we I've uh well paid for a course and the guy says he makes a lot of money and this is one of the strategies he uses. I'm in a community, kind of like we have Zoom meetings every week and they've been like other people have been trading it. I've had like varied success, like profit here and there. Um, and I find that usually like I've done well like on demo accounts trading this, and when I get to live accounts, like I guess my like emotions and stuff get too
Hmm.
messed up, and I look back down, I'm like ah. So that's why I saw this algorithm trading, and I'm like, this is, I think, what I'd like to learn about.
Okay.
Because yeah, I've had success doing demo accounts for I've done a couple different patterns. I guess I could share this too, in like November, I was up like 8%, October. I think that's a month I did a live account, but November, December, I was on demo accounts doing great for a while. So I've had some success on these um, from seeing it myself.
Nice. Cool. Okay. Sounds great. Awesome. Cool. I like the idea. I think it's pretty simple. Is this only for Forex or would you want to do this for crypto or something else as well?
Yeah, I think it would work. I've mainly been doing it Forex, but I think it could work crypto or I know some guys I know trade US 30 a lot. They say they see like this pattern often. Like especially around opening, like you'll see it start to push down. There'll be an impulsive move, then it'll come back near where it started and take off again. Um, so it could be like a US 30 trade. Um,
Okay.
but yeah, I
So
haven't looked at
what's the
crypto a
US
whole
30
lot because
again?
to me, crypto seems kind of sporadic and hard. I've tried trading crypto before and I've lost a bunch, so I kind of don't. But
Okay.
it would be a good
It's
thing
a
to test,
different
I
way of
think.
trading here, right? Like
Yeah,
there's ways to make money in every market, right? Just there's
yeah.
different ways to do it, right? Okay. What's the US 30, by the way?
It's a index here. I'll bring it up. I think it's
And
like
it's stock index?
yeah, it's like a stocks. Yeah.
Okay.
So they
So
take
it's Dow
like
Jones.
30 top US Dow
Okay.
Jones Industrial Average. Yeah.
Okay. Cool. Okay. Sounds interesting to me. Cool. Does anyone have any questions around John's strategy? Questions, comments, thoughts? Okay, cool. Awesome. Okay, so I'll add you to our poll for today. Who else wants to do something? So Jonathan Mudweiler,
Mundweiler. Hi.
Mundweiler, sorry, thank you. Yeah.
Yes, absolutely. So, yeah, a friend of mine actually and I have been talking about the idea of trying to put a bot together for what he does. He usually does just options trading, and he focuses on the S&P 500, and he just focuses on that one thing, and he's done fairly successfully just doing that. Like he made 19% today uh, on one option, and then uh, I don't know if he went for a put option afterwards, but I was just looking at it, and if I can go ahead and flip my camera here because I'm on my phone today,
Yeah, go
and
ahead.
um, found the button and then I pushed the wrong one. All right, so that's what the S&P 500 looked like today, and I'm not logged into the computer I usually use uh, for that, but I had been looking into the idea of building a bot where you use either the Erie or Edry indicators from the EMA length. And on TradingView, you have the EMA ribbon, you have machine learning tool or the RSI tool in order to go ahead and use they said to use the upper 60 and the lower 40 just to start out on building the spot. And I just figured, hey, since we're here, this is the kind of bot I thought about putting into Pionex GPT and seeing what it comes up with. But I figure you guys may be able to do something even better with it. So,
Okay. So what exactly does it do then?
so what it would do is on a back out of TradingView and go back in, so show up. But what it would do is ideally follow your. Let's see. I'm looking for my EMA ribbon, but it would follow your indicators from the EMA ribbon from also from it was the machine learning tool where it has indicators of when to buy and sell, and then it would buy options in order to in theory probably buy somewhere like where this shows up right here, and where this shows up right here, and you see that it rose up, came down, and there's been an overall downtrend, and then starts going into an uptrend that it would buy, and then would follow this until it receives an indicator to sell, and then it would sell your option, and then when it comes around to this point and it detects that it's coming up to a high, it would buy a put option until it comes down, and it would sell. Now, whether the indicators, because like I said, I'm having troubles pulling them up right now, but whether the indicators would indicate that or as it falls down, hopefully this overall trend would be great to have come across in a put option right here.
Mhm.
And then have it be able to do both functions as it detects trends up and down.
Okay. Well, but I mean, buying the options is quite easy. We can definitely do that, 100%.
Mhm.
Right. But now the question is, what are those indicators and what's actually determining the buy and the sell? Right. That's the tough part. Right.
Right.
Yeah.
And so, yeah, but that was said, I'm sorry, I'm not on my not on my usual computer that I use for this. But let's see, indicators. EMA. Yep, it's asking me to join if I want to show those. So, if you put it in EMA into TradingView, it'll allow you to pull in the EMA ribbon and or the EMA wave indicator, and you can use that to follow the Fibonacci retracement in order to see as it gauges across, and you can use that tool. That was one of my primaries that I wanted to use. I also wanted to use the relative strength index in order to have it gauge where it would buy and sell. And then it was and then that actually does give direct buy and sell indicators. And then the machine learning tool gives you, it actually comes up with little markers that show up where it says buy here, sell here throughout. And that would be what I would hope to use in order to build this particular bot with those three tools.
Okay. So I guess a couple things there then. We can definitely build an algorithm that just uses trading view indicators. I was actually working with someone today about on that. We could just have trading view whenever it sends like a notification in trading view. You know how you could like notify you of things? There's a way they can notify it. It will notify your bot and it will make purchases and sales, right? So we can definitely do that. The problem with doing something like that though is that we can't backtest it, right? You get to see what it's going to look like going forward, right? But we don't have the data going back, right? Unless you could somehow get the data from wherever else, right? So we could definitely build something like that. Or what we could do is if you have an idea of how these indicators work, which, you mentioned RSI. RSI is a very easy one to do. Typically, we'll say if RSI is above 70,
So we go on.
we'll sell. Sorry, what was that, Gil? Hello?
Somebody else had said something.
Yeah, no, that was Gil speaking. I thought he was commenting. I think he was just speaking to someone close to him.
Swatting the cat, sorry.
Yeah, no problem. I know the feeling. So we could do an RSI bot where basically it usually will sell when RSI is above a certain number and buy when it's below. You definitely do that. Use like 0 DT options or something for that, or 1 DT options. We could do both. We could do something where you have moving averages, right? There's a bunch of different things that you can do with moving averages, right? There's, if there's a cross, if there's something else, right? So is there maybe we could pick one. What if you could pick one of those, what would you want to do?
One of those, I would choose the first one, the trading view indicator, just so that way I could see how that would work and how that would function personally, because that's what I'd like to see. But if you think more people here would benefit from the second, I absolutely am on board with seeing that too.
So
So
what do you
I
mean
leave that up
by
to
the
the
first?
group to vote if they want to put in their opinion as well.
Sure. What do you mean by the first exactly?
Just setting up a trading view bot that uses the indicators that are there.
Okay, sure. Yeah, I was literally working on that earlier today. We could keep building that. Sure. I mean, why not? I could add that in. Let me add that to our poll here to start working on. Build a trading view bot. Trading view bot. All right, so basically what you would do is you'd have trading view has certain signals, it would send those signals off, and then you have something that's listening into it and actually placing trades based off of that. I have a lot of the code actually already working, so we can get that done pretty quickly. But again, the only problem is that we can't back test it, right? So
Yeah.
we can build it and we can see it working, right? But back testing is a whole different story, right? Because we have to have historical data somehow, you know, so that's a little bit more difficult. But okay, cool, awesome.
I have a question about the
think a lot
back
of people will be interested
testing.
in that. Yep.
So I've also got a program FX Replay, which basically has like the trading view programming, and you can like go back in time and replay going forward. Could you use something like that to back test a trading view like indicator bot, or would it not work? Maybe.
I'm not familiar with that. Maybe, right? That's possible. I'm just not familiar with that platform.
Okay.
Yeah.
If you want, I could screen share it for just a second.
Sure.
It might be here. I gotta find it. Okay. So the way this works is, you basically pick a time and you basically go back in time. So I went to like, I think the year like 2020 or something. Here, I'm gonna click the 1 month. So right now it's showing me like what the chart would have been like mid 2020. And then I can just play, I can play like forward 1 minute. Like if I go down, like, let's say I want to practice lower time frames, I could hit like play and I could just start to play out the candles. Or if I want to do higher, I can go to like the 1 hour. I can make each step 1 hour and I can just play. And the thing it does too is it can track your trades. Like if I put the like if I put this tool here and then hit place order, like it'll actually run it and it like keeps charging my account size and everything. So and notice it's
Right.
basically got they must have made some sort of deal with TradingView or it's the same program because it's like got all the programming, all the indicators. So we could put whatever indicator we want and I forget where's the indicator. Yeah, so indicators and strategies, you could put any of them on here and then you could like let it play.
Yeah, I've seen stuff like this before. The problem with this is that it's very manual, right?
Right.
Like you're not like this is there's a little bit of subjectivity involved in it, and also you just physically have to do all the work, right?
Right.
So
So you'd
you
have to like
definitely seen
physically
stuff
go
like
through
that.
it
You
to
can
test.
definitely do that.
Yeah.
Yeah.
Cool.
Cool. Yeah, actually, I know exactly how they did that. I got into an agreement with TradingView for that too. I want to put into our website eventually. I have like the whole TradingView plot and kind of work off of that. That's a bit more advanced. We're gonna get there eventually, right? But yeah, that's definitely very cool. Yeah, so 100% you could back test it that way if you wanted to, right? But in terms of back testing with what we currently have set up, I think it'll be a little bit more challenging. We can figure it out, I'm sure, but just not in the next like 2 hours, you know? Yeah. Okay, cool. So we got two strategies here. So we have John, your flag pattern, right? And other John, we'll call you Jonathan, that's all right. The trading view bot, right? So basically copying trading view. What else would you guys like to work on today? Anyone else have some ideas for things they want to build out?
Did from last week's, but I still don't got the data because holidays and a lot of work. So yeah, so Maybe not this week, but next week for sure.
Okay, cool. Yeah, I know you mentioned you had something in mind there. I totally know what you mean. I want to work through the holidays. I'm like, yeah, I'm gonna get productive. I'm gonna catch up on things, and doesn't end
It
up
never
happening.
happened.
Yeah, in-laws came over. People have holiday parties, and next thing you know, I'm just on
Yeah.
the couch all day watching Netflix or something. Which, by the way, if you guys haven't watched Reacher on Prime Video, very good show. If you guys haven't seen that,
Preacher, right? Yep.
Reacher, yeah,
Right, you're
really good
right.
show.
It is.
Yeah,
And it's
yeah.
got every what? Sundays it comes out?
Something like that. I thought they finished the whole thing. We were binge watching it yesterday, and it came to the sixth episode. I'm like, oh shit, like it didn't finish. We're like, we have to like wait the next 2 weeks. But it's one of those shows they put on, you just don't want to turn it off,
Right. Yeah, I just
Really
binged the
cool.
shit out of it.
Yeah.
But no, well they have I think it's every weekend they come up with an episode. So it's definitely too short of a season for that to just be done.
Yeah, it definitely didn't end yet. I mean,
Yeah,
the way that the episode ended is definitely not over yet. I can guarantee you that.
yeah, for sure.
Okay, all right. Okay, so we got two ideas. Any other ideas?
Yeah, I
Anything
had
else
one.
you guys think
I was thinking about, I think I mentioned this before. I was thinking about doing one where it buys an option at the end of the day and then kind of sells it when the market opens the next morning. This would be when the market's in an uptrend, so it would be have to be when moving averages are heading up. But I think in an uptrend, a lot of the movement happens in the overnight session sometimes. So maybe if we bought a call at the end of the day in an uptrend and then sold it the next morning, right after market opens, that might be something that could be profitable. I've been thinking about.
Okay, so buying a call at where my screen go? My screen's like all over the place right now.
That would usually mean that it's at its lowest point every going towards the end of the day, right? The trading day work.
No, not that it's necessarily at its lowest point, but that sometimes I think that market makers move the price overnight because a lot of people get out of their positions before market closes. And I think that's kind of a way they can capitalize on retail traders. There's a lot of movement that happens in the after hour sessions on indices sometimes. So, I mean, it could still be at a high at the end of the day, but I'm thinking it'll be even higher when the market opens the next morning, is what the idea.
Yeah, a lot
Yeah.
of times it's a gap when the market opens.
Yeah.
So you're saying that you're looking for an upward trend during the day.
No, like in general, like on the daily chart, it would have to be like make sure we're in a bull market and then buy a call at the end of the day and sell it the next morning.
Okay, so make sure that today was a bull market, for example. So market was up today. And then buy it at the end of the day and hold it until tomorrow.
No, close, but I mean, it would be more like the moving averages are trending up on the daily chart and
Okay.
then buy a call option at the end of the day and then hold it overnight.
Okay. And what moving averages would be trending up?
I'm pulling up my TOS to see what I think might be the best ones, but let me see if I can pull up some research here that I have stored. Like, okay. Yeah, I found my moving average documents.
I've generally heard that it's pretty good to hold overnight. I actually built a bot a couple years ago where all it does is just buy overnight, and overnight just tends to be a lot more positive for some reason. It's like a really weird effect. Like if you compare how the market performs intraday versus between days, the between days just smokes it, right? Like the majority of the upward movement in the market happens overnight.
Yeah, that's kind of what I noticed. Like I would get out of a position and just wish that I'd stayed in it because so much movement happened overnight.
Yeah,
It's really interesting.
that's
But
definitely an observed effect. That was like there's an article on Bloomberg about that. That's why
okay,
I personally made it, you know. Actually, it is true. It does work that way.
okay.
Yeah.
So we could use like the 10 and the 20 EMA. We could also use the 9 or the 18, and it might be fun to use like 3 EMAs just to add to make sure they're all stacked on top of each other.
Sure.
My other idea is this file will open.
And why do you think that's a good idea, by the way?
These are EMAs that were mentioned by one of my teachers that I respect a lot. So that's what I'm going to on these. And we can adjust them later. You know, we can move around to see if other things work, but I think these would be a good place to start.
Okay, cool.
The other set of EMAs was, what did he talk about? If the 9 and if the 9's above the 18 for at least 3 days is one way to identify a bullish market. So I think that would be a good place to be.
Okay, 9 versus 18.
Yeah,
And
for
dailies, right?
and not that it just crossed, but it's been above for 3 days.
Been about for 3 days. Okay, cool.
So yeah, that's my idea. I think it might be profitable. I really do. So vote for me.
Yeah, sounds good. Cool, awesome. Okay, so we got 3 ideas here. Any other ideas, guys? Anyone else got a burning desire for something to work on?
How about open range breakout algorithm for SPY trading, options trading?
An open range breakout. So what exactly does that mean?
That's cool.
Basically, wait for the first 15 minutes, see how it performs, and then you'll have the pre-market open ranges as well, and then if it retests back to that level, you go long or short based on where it is going at. So if I can.
Okay, so you're looking at the open of the day, and then you're seeing what direction it goes. Do you have, yeah, if you have some sort of visual, that'd be helpful.
Yeah, so basically here it opened up and then it retested back at this particular level. So you go long, or this other day you have a range. So I've seen multiple people. So this person saying that 12-minute range works out the most, and there are 15-minute, 30-minute, and things like that. So basically, you set your candle size for whatever range you want to see what's the high and the low, and once it comes back to that level, if it's on the higher side, you go long. If it's on the lower side, you go short.
Okay, so you're basically just looking at the first candle.
Yeah.
Okay, so first candle, and then you're checking if it retests.
Yeah.
Okay, that makes sense. Yeah, I feel like the first candle has a lot of importance, you know, kind of how the market opens up. Okay, cool. So I'll add that to the list as well. And by the way, why do you think that's a good idea? Why do you think this would make us money?
A lot of the times I feel that in the starting few minutes, the rest of the day is sort of set in those minutes. unless and until you have some FOMC meeting or some news breakout, it usually tends to follow that sort of a trend. I've been reading about open range breakout, and a lot of people seem to have gotten good results with that.
Okay, interesting. Okay, sounds good. Cool. All right, so I'll add yours as well. Okay, so we have 4 strategies so far. And anyone else who wants to add their hat into the ring? Okay, cool. So let's get on to the second part of this this thing here. So I put out a poll to all of you guys, so you guys can all vote. Let me just rehash all of them again. We had John, who talked about the flag pattern. Seemed that it was mostly for Forex, but we could use it for other assets as well, where essentially we're looking for a strong move in one direction and then a retracement, and then we're entering at that point. Jonathan, who had the idea of making a trading view bot. I think this one's quite generic. Basically, you know, anything that you do as trading view, we can basically turn it into a bot, which is pretty cool. I've had a lot of people ask me about that before, and I do know that people are interested in that. We have Worth, who's talking about trading overnight and looking at EMAs, specifically he's talking about the 9 and the 18 EMAs. We can also test out different versions of that. And see how that works out. And then we have Shishir, I hope I'm pronouncing your name correctly, for the opening range breakout, which basically we're looking at the first candle and then seeing what happens afterwards. All right. I'll let you guys vote on that. I'm seeing your votes coming in here. I'm going to go take a quick break. I'm going to go grab some water, use the bathroom. And when I get back, hopefully you guys are done voting. Feel free to make your cases, guys, if you want to. All right. I'm starting to see it's starting to converge pretty quickly around one thing. We have a couple people left to vote, though. So feel free to make your cases, guys. And when I get back, we'll get started on this. All right. I'll see you guys back in 2-3 minutes. All right. And we have 6 people left to vote. So please, guys, make sure that you vote. 5 people left. Be right back. All right. Hey guys, welcome back. We got a verdict here. It was actually fairly close, almost a three-way tie. Let me end this poll and I'm going to share the results with you guys. Let me see. Tell me if you guys see this pop up on your screen. Essentially, we had John's flag pattern. We had 5 votes. Jonathan, we'll say, the trading view bot, we had 4 votes. I'm actually surprised that more people didn't vote for that because I think that's a really good one. I'd love to build that one week, actually. I think it'd be fantastic. That's a very generic bot that could do a lot of things. Surprised he didn't get more votes, Jonathan, by the way. Maybe we could do another week. Worth was the winner, was 7 votes for the trading overnight, the 9 versus 18 EMAs. And Shishir had 2 for the open range breakout. Oh, very cool, guys. All right, so crowd has spoken. So let's work on it. So Worth, do you want to tell us a little bit more? Actually, let me share my screen really quickly here. Just so everyone knows kind of where we're at. Yeah, so I'm just reading the thing here. So someone wrote, actually, Wes wrote, honestly, didn't get my vote today, but I do like the idea of this one. I like the idea too, Shishir. I think it's a pretty cool one as well, your idea. Actually, I thought today we had a bunch of really good ideas, actually. I'd love to try all of these. So we've done that. So we have now done the trading idea presentations. You guys have submitted your votes. The crowd has spoken. So let's start building this algorithm. Before we start building it, Worth, do you want to maybe show us some specific examples on the charts of how exactly this looks? If you're there, Worth. I also got a message from my team, by the way, just as a reminder, we're having a New Year's sale going on right now. So if you guys want to join any of our plans, it's 30% off right now. So in case you guys want to, if you want to do that for New Year's, just to let you know, should be in your emails.
Nice. Yeah, sorry, I muted there.
Yeah. No problem. Go ahead, Worth. So do you want to share your screen? And
I thought they were all good ideas. I almost voted for the trading view bot too, because that's something that's so versatile. You know, we could
I think it's great. I started doing it for Dante. Dante is in our class. I
Yeah.
started building it for him because he built out this really fancy stuff in trading view, and he wants to actually trade with it. So we started working on it the past few days, and it's actually not that hard to do. And
Right.
I actually think we could probably knock that out in 2 hours. Like if you guys want to do that in a future session, we could definitely do that.
Yeah, hopefully we will. And I think the opening range breakout was something worth looking into as well. And the John's flag pattern is also, worth exploring. But I'm glad we're doing the overnight options bot tonight. Yeah, I think it should work with options. And I don't really think I need to share a screen. It's just it's a very basic bot. It shouldn't take long at all to build. There's just a few conditions. There's really not even a stop loss. So there's only, an entry and an exit. We'll have a couple variables. We'll have which EMAs to use should be able to be switched, and the amount of time before market close to buy and the amount of time after market open to sell. We could probably play around with those a little bit as well. So maybe those could be changeable or variables. And basically, the pattern is first check to see if the 9 has been over the 18 EMA for 3 days. And if it has, go to the next condition, which would be buy a call with 1 day till expiration. Let's just say 5 minutes before close. And then the next step would be sell that call. Let's say 1 minute after open. And that's it. Pretty basic.
That's very simple.
Yeah.
Okay. Yeah, we can knock that out pretty quickly. All right, okay. So let's build it. So let's get to coding. So for those of you guys that care about how to do all this coding stuff, this is the way that I'll normally use the bot. For those of you that don't care about coding, I'll be speaking and telling you kind of what I'm doing. If any of this confuses you, don't worry about that. Again, you really don't have to be a coding whiz to do any of this stuff. You can literally just take the code and run with it afterwards. But I will be talking it out as I'm building this, right? So let's start by giving it a name. I'm going to call it options because that's what it is. Options overnight or something like that.
Sure.
Overnight calls. Or is it going to
Yep.
be puts as well?
Just calls this time.
Yeah. I think we have a much better chance of doing well with calls. And the reason why I think that personally, and we could add puts if we want to, but I think calls have a better chance of doing well because I do know that there's that effect overnight normally that the market tends to go up overnight, first of all. And second of all, the market just tends to go up in general, right? So the probability of success, I think, is quite a bit higher.
And thirdly, when the market goes down, the IV collapses, so you're losing money on that as well. So there's one more reason why calls are probably better than puts on this.
The IV collapses. What do you mean by that?
The implied volatility. Let's see.
Like if it collapses overnight, you're saying?
Well, in general, due to the Shoals equation, calls are more profitable than puts. Usually because of the way volatility interacts with the way the market goes up and down. It's harder to make money in options on puts than it is in calls.
Okay. Interesting. I wasn't aware of that. I mean, I know in general, I would think that it'd be easier to make money on calls, but that's more because just the market tends to go up, right? I wasn't aware that there's like a mathematical reason behind it as well in Black-Scholes.
Yeah,
That's
because
me.
when the market drops rapidly, the volatility goes up usually. So that makes the calls and the puts more expensive. It's a simple way of putting it. So
Okay.
the price on the call. Wait. Yeah, the option would be more expensive when the market drops. So anyway, that's what
Okay.
I've noticed in the past.
Okay, cool. All right, so I'm just cleaning everything up here. So for those of you that are new to this, you might notice what I'm doing is I basically copied an existing algorithm and I just basically deleted a bunch of stuff, renamed it, and now we're kind of here in like a very basic looking algorithm, right? So now the first thing that I'm going to do is look at what parameters we want to pay attention to here. So it sounds like we have 3 EMAs that we want to pay attention to, 2 EMAs.
Just 2 on this, I guess.
So we'll call it EMA slow. And then EMA fast. And you said it was what, a 9 and 18 or
18.
something?
Yeah.
18 and 9. Right? And they're days, right?
Yes.
Okay. So we have slow and fast EMAs. And then what are some of these other things? I guess what time we buy it before closing, does that have to be a parameter?
Yeah, I think we should be able to play around with that.
Okay.
So number of minutes before market close to buy and number of minutes after market open to sell.
Time before close to buy. Right? We'll have it as a time delta, right? That way it can be pretty versatile. And then time after open sell, right? It'll be, you said 1 minute after open, 30 minutes before close.
Let's
right?
do 5 minutes before close.
How many?
5, please.
5? Okay, cool. So in that case, we also want to go self dot minutes for closing because the bot tends to shut down also a little bit before closing. So I'm going to set that to a 1. Okay, cool. So we have that set up here. I think we're good to go. This for some reason is a red thing.
I
I
didn't know
don't
the
know
bot.
why this is.
Okay.
What was that?
I didn't know the bot closes down early before market close.
Yeah, it tends to do that. Just like close out positions and stuff. I've recently changed that to be, I think, a default of 1, but just in case, I want to make sure it's 1, right? Because we're getting that close to the market close.
Okay.
Okay, cool. So we set our parameters. That's what we want to do. Next thing we do is we get all of our parameters. Get the parameters, right? So EMA slow, EMA fast, time before buy. I do this for those that care to basically make it so there's less writing later on, right? Like instead of doing this parameters, we just make a simple thing. So we have that there. And now, so first thing we want to do is we want to get our indicators, right? So we want to get this historical data. So get historical prices. All right, so we'll go prices equals self dot get historical prices. And we'll say, oh, another thing we need to do is we need to do what the symbol is. All right, that's what we're missing. What do you want to do this on? The SPY?
SPY, QQQ, DIA. We do all 3, that'd be awesome.
Okay. We'll start with 1. We could eventually make this thing do all 3, right? That could like diversify, but they're all going to be kind of correlated anyways, right? So go symbol equals, okay, and get historical prices. My setup's a little screwy here, but so what is it? Symbol, and then it's length. We're gonna go length is the max, and then we're gonna go times 2, so we have extra data there. Because EMAs actually learned recently that to get a proper EMA, you have to go like much longer than the actual time period. I don't know if you guys are aware of this,
Okay.
but if you want to calculate an EMA, like a 10-minute EMA, you actually need like 100 minutes worth of data. It's kind of weird that way.
Hmm.
Yeah, just the way that the exponentials work, they like decay. It's like I don't know. I went through this with someone the other day. I was like, holy crap! It's like really there's a lot of details to it. So I'm going to get 3 times the data that we actually need, or the length of the EMA, right?
Is that gonna be enough?
I think that should be enough.
Okay.
Right. So we'll get for that symbol 3 times the max EMA in days, right? And we'll get df equals prices.df. So now we have a data frame. Now we'll calculate the EMAs. There's one, there's another one, slow, fast, get the last row, get the current and EMAs, EMA values, EMA slow current, EMA fast current. Okay. So now we have our indicators, right? We've downloaded our prices, we have our indicators, right? Now the next thing we want to do is we want to say are these crossing or not, right? So tell me again how this works. It's a certain time before the day.
The 9 needs to be above the 18 or have a higher value than the 18 for 3 days in a row. So
Okay. So it needs to be for 3 days in a row, it has to.
yep,
Oh, that's a different thing. So it's not just crossing, it has to be above for a while.
yeah.
Okay, all right. So this is gonna be a little different. So I'm gonna actually change that.
Okay.
But I just realized before that we need to do this other condition. Check or say get the time that we should be buying at. So buy time is DT replace. I'm not actually doing all this. Using time before close.
And I wonder if we can make this work. Like, remember Christmas Eve was a half day? What would this still work on like half days that happen like that?
Would it happen on a half day?
I'm just making sure the bot still performs, or just know whether it works on those days or not. Or
Yeah,
maybe
we'll start off with it not doing that, and then we'll add that in because that's like a detail to put in.
that's
For
just
now,
a
I'm just
detail,
gonna
but I wasn't sure if the system you were going to use would factor that in or not.
yeah, as of right now, I'm not going to because that's not like the central point of this algorithm right now. But we could definitely add that in later. That's not too hard to do. We have like a market calendar, and we can look at like what time it closes on that day. We can do all that. But you know, let's just keep it simple for now.
Sounds good to me. Yeah, it's only like a couple days out of the year it happens anyway. So
Yeah. And if DT is greater than well, it wrote a lot of code here. I guess it took all this stuff. Length, historical data, calculate the EMAs, get the current price. Oh, it did a lot of stuff here. It assumed a lot of things. AI is crazy. Okay. That's mostly wrong, but this stuff is right. Okay, so if it's time to buy, if it's greater than time to buy, and let's say if it's greater than time to buy, and then we'll also have another thing that says, basically like, have we bought yet today? So we'll have like a little thing that says self dot has purchased today was false. Okay, so has purchased today. When you go through this whole thing, we'll eventually go self set has purchased today to true. Go if not has purchased today. Okay, so we check if it's past the time to buy, right? We check past just in case like there's a delay by like a minute or whatever, right? We check that we've passed that time. And then we check, have we purchased yet today? If we have not, then we go through this whole cycle here and we check now whether these EMAs satisfy the thing here, right? So you're saying that you want to have the last 3 days, the fast EMA has to be above the slow. Is that what it is?
that's correct.
Okay. Maybe we should make that a variable too.
Yeah, we could do that.
We could say bullish days. Okay. We'll put in bullish. So if someone wants to change that, they can mess with that, right? Check if the past X days have been bullish, right? So is bullish equals false. Go in range, bullish days, EMA fast. We go backwards, EMA fast is above the slow. is bullish, false break. Okay, so I get why it's going true. So happy path, this is all good. If this violates at any point in time, we go false. Right, so if fast is above, we say true, 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 true. And then if at any point this is not true, then it says false. Okay. So now comes the fun part, the trading part. We'll say if is bullish for more than is buy, right? So if is bullish, get the current price of the symbol. Okay, we said that's true, except it's not going to buy the stock. We now need to buy the underlying asset. So what we'll do is we'll create the options asset. We'll go asset symbol, asset type option, right call, expiration date is going to be +1, right? Strike price, I'm assuming is going to be at the money, right?
Yep.
Yeah. Strike price. Round to nearest one. I don't know why it keeps insisting on 5% for some reason. Round it to the nearest one. There's a strike price. And then our expiration is going to be time delta +1. Although it could be over a weekend, and I have this little thing here that basically gets the next expiration date. We should even put this into LumiBot. That basically looks for the next expiration date. It's expiring plus this one, this little thing right here. Here we go, expiry. Start off with expiry being this plus. We can make days to expiry also a variable. You guys want to play around with that? You do that. It's pretty easy to do. Days to expiry, and we'll do a 1. Right, so we said a 1 DTE, right?
Yeah, 1 DTE. I mean, if we're going to use this on a stock or mess around with it with, I don't know, the Magnificent Seven or something like that, we would need a longer expiry, say like 7 days or whatever on weeklies. But would the bot work if, say, it's Tuesday and we had the expiry is, or say it's Wednesday and the expiry is Friday and we had, would it just get the next expiry?
Yeah, I'll get the next one.
Okay.
So basically what it does, it'll take today, let's say if it's +1 day, right? So today plus a day is Wednesday. Okay, that works, that's fine, right? If it's a Friday, it will go +1 day, it's a Saturday. Try again Sunday, try again, and then Monday will do it, right? So it does roll forward a bit like that.
It'll just keep trying until it finds the next one.
Correct, yeah.
Cool.
And that's what this mechanism does. I feel like I should add this into what we bought to make it a little easier. But there we go. Create the order. Order asset by What's option asset? Like we're almost done building this whole thing out. This is actually fairly easy, like one shot. We'll see if we got it done the first time around.
Just out of curiosity, why are you using options instead of the underlying asset? Just feels like that expiry.
I just feel like you can make more
Variance.
money doing it, but
Okay.
Larger percentage move.
yeah,
Yeah.
you just make more money, you know. Because if you're just gonna do the underlying asset, then you're not gonna beat it, right? Like, I mean, I can tell you almost 100% for sure that this will, like, if you did this for the S&P and you just bought the S&P, you're not beating the S&P. You know, like I'm almost 100% sure of that fact. Maybe you can do something like buy like the triple leveraged ones or something like that, like TQQQ or UPRO or something like that. Or now they even have quadruple leveraged ones like the XXXX, right? Maybe those would work well, right? But the underlying, you're just not going to make enough money, right?
Yeah, fair enough.
Yeah.
Thanks.
Yeah, no problem. We can test it if you want, but like, I mean, you know, I feel like I've done this enough times. I feel like I'm like very confident in that. Okay, so we have that. And then we have, I guess, quantity. How much are we trading each time around?
Let's
Are we
do
trading
2% of account.
2% of the account?
Let's do 10% of the account and make that a
10%.
variable. Good.
Okay. So percent account to spend. Okay, sure. Percent account to spend. Okay, and then so which means we're going to have to get, in that case, this is our final option. We're going to have to get the price of this option. We're going to get this price here. Actually, we already have price, so we don't need to do that. Okay, price. So we'll just go get the total account value, which is portfolio value is what we call it. Get portfolio value. And then calculate the amount to spend. The portfolio times the amount to spend, right? And then calculate the number of contracts to buy, or just the amount to spend divided by the price. Okay, so contracts to buy, and then we submit the order. That's it. Okay, and that's pretty much the whole thing here. So let's run this in debug mode just to make sure that everything's working properly.
Okay, and then we need to set the cell parameters as well.
Yeah, exactly. That'll be the next thing. I just want to see if what we've done so far is working.
Got it.
We've written a bunch of code and it's like, I don't know. I always feel weird like writing a bunch of code and like not testing it. You know, did we just write something that works or not? You know, I'm pretty confident in this one, but we might have messed up something somewhere.
Yeah, might as well check before we get too deep into it.
Yeah, exactly.
I'm sorry to interrupt. I have a quick question. If we I'm kind of new just on the open house. I might have to go in a little bit. Do you send out the Zoom to everybody or just if you pay for the group? I see you're recording the meeting.
Yeah, we'll send it out to everybody. We'll send out the
Okay.
recording, but if you want the code, you have to be part of one of the plans.
Sure, definitely. That makes sense. All right, cool. Well, yeah, I'll get back to you guys later.
Okay,
Thank
all
you.
right.
This has been awesome.
Have a good one. Cheers.
Yeah.
See you, John.
Let me just confirm this 1 second. Let's confirm this. Okay, cool. Yeah, just want to make sure that we're doing that. Okay, cool. So we went through this. So here's our first iteration. We're going through this, right? Here is the time of day. It is 9:30 a.m. time to buy is going to be 3:55, 15:55. Right, so we're not at that time yet. So we keep going, yeah, because it's 5 minutes before. Yeah, we said 5 minutes, okay. I guess it's basically just gonna keep going until 5 minutes before. So get rid of that, run it. Okay, now we're in that time. So now the date is 3:55, perfect. So right before market close, we're good to go. As purchased today is false. So now we're going into here. Now let's get our data. Downloading all of our historical data. Cool. Perfect. Now we're looking for EMA slow, EMA fast. We got those. Now we check, is that the case for each one? We got back is bullish is true. Okay, so let's confirm if that's being calculated correctly. So I'm going to go view value. Let's take a look at this. So here is basically what we got. We got a bunch of days. Cool. And we have, so here we started the back test on June 1st of 2023. So we're looking at the day before, which had all these values here. Here's the slow, here's the fast. Looks like fast is above the slow, fast above the slow. Okay, that satisfied that condition 3 times. So we're good to go here. So we're in a bullish condition here on June 1st, which sounds about right, given my knowledge of the history of what happened then. Okay, so we are bullish. So we'll get the price. That'll establish our strike price, and we have a crash. Let's see what crashed here. Get current price. There's no get current price. It's called get last price. That's why. Get last price. Get last price is there. Okay, so let's restart this. Yeah, we're good to go. We got the EMAs, all that. It's bullish. We check the last price. Downloading some data. Something crashed. Expiry and non-existing expiry dates. Oh, that's why. Because this I need to put into here. Non-existing expiry dates equals that. I think that's how we did it before. Yeah, okay. We start it again. So Brian asked a question here. Are you using Polygon for backtesting? Yes, we are. We're using Polygon data to backtest this. Okay. All right, okay, so now we're going to put something down here. Oh, something crashed again. What crashed? I expect the keyword expiration date. It's not expiration date, it's expiry, I think. Expiry equals. AI is smart, but always makes like these silly mistakes. It's called expiration. That's what we want. Expiration. Go and not strike price. We call it just strike. Right. Okay. All right, let's rerun this again. I see some more chats in here. Brian asked, do you need this since it's daily data? So first of all, this isn't daily data, Brian. We're using minute data because we're buying it at specific times of the day, right? We're buying it at like 5 minutes before close and selling it right after the open. So we're using minute level data. But second of all, we would need it regardless because we're trading options, right? So Polygon also gives us options data as well. It's not just intraday, it's also other types of asset classes like options that we need the data for. Because Yahoo does not have historical options data. Okay, so we have this going here. Perfect. Okay, so we have our first option that it wants to buy is an option that expires on June 2nd, a 421 call. And does that make sense? The price of S&P at the time was 421.43, so it's good. It is June 1st, so it's buying the June 2nd, so that's good. Right, and it's going to place this order. How many contracts is it going to buy? It's buying too many contracts. We need to divide this by 100, right? Because options are base 100, so we'll divide by 100. Okay, but other than that, I think this all looks good to go. Place the order, has purchased, and then it skips over to the next day. Okay, cool. So this is looking good to go so far. So now we need to set up a thing that sells it, right? Because right now it's going to hold it to expiry. Yeah, we have this big jump in portfolio value because took just this crazy bet. Okay, cool. So now that we have this, so now the selling, we'll have to calculate time to sell. So get the time we should sell after market open. Okay, 9:30 plus time to sell. Okay. Check if it is time to sell. If it's greater than time to sell. Maybe we replace everything with has purchased today instead of has purchased today. We'll say we'll call it something like owns option. Put this over them. We'll call it own option. All right, we'll say okay. So if the date is greater than time to sell, and if we own the option, then we want to, in this case, says get open orders. Okay, this is not necessary. I don't know why it's saying that. We'll say I mean, simple enough, we could just basically sell everything, right? We can find a specific option asset and just sell that one, right? Or we could just sell everything we own. I think it'd just be better practice to just find a specific option we own. We'll say positions equals self dot get positions. Loop through the positions, positions. Check if the position is an option. Right? If it is an option, then sell it. Oh, an option equals false. Okay. This seems like it's good to go here. Okay, so let me restart this. I think we should be good to go. Let's put it here. Okay, this looks good here. Okay, those own, and then now we're saying. No, this is wrong. Because now it's selling immediately after. Time to sell needs to be. And
To be the next day.
yeah, it has to be the next day. Um. Do we have a variable that says how long we hold this thing for? Oh, it says days to expiry. So, I mean, what we could say is just it's less than the time to buy, right? So if it's greater than a time to sell, but it's less than a time to buy,
Yeah, that would probably work.
right? Because it's kind of saying the same thing. It's not exactly the same thing, but it's pretty similar, right? Unless you have them like cross, which I doubt you will, right? That would result in a bug, but
Yeah,
I don't
that's
think that'll happen
not
very
consistent
often, at least.
strategy.
What was that?
It's not consistent with the strategy, so that shouldn't happen.
Yeah, exactly.
Um, what if the bot quits or something and starts back up? If it gets disconnected, would that be a problem?
Yeah, as of right now, we don't have anything to deal with that.
So
We'd
we're
have to add additional things to deal with that.
just hoping that Replit will stay online and, and we'll keep trading.
Yeah, I mean, Replit's pretty good with this kind of stuff, right? It's a lot easier than doing it with your computer or Replit or, Tradier, right? Okay, so far we're looking good to go here. We're selling some stuff. Looks like we lost some money for some reason. Actually, no, we didn't. We started with a budget of 25,000. I was playing around with it today. It's like a 25K account. What would happen? Maybe we should set that to 100K. So far, it's making money though. Making money so far. Is off to a good start.
Better than expected, really.
Yeah, it's doing quite well.
See how it does.
It's only a few days. It's already up a lot. Wow, look at that. For those of you that don't know what we're looking at, it's this portfolio value here. It started with 25 grand. It's now almost at 31,000. It is doing quite well. Mind you, this year was very bullish, so it's a bit biased.
Yeah, this period was like the biggest upward move in the last 40 years, I think. So
Yeah,
this is
yeah,
not the full result.
yeah. It's definitely definitely a biased year.
Mileage.
I mean, off to a good start. Yeah, lost a couple here. Down at 26. Oh, now we're losing. It made quite a bit of money past the first few days. Now it's losing for a few days. While this thing's running, what I'm going to do is I'm going to add in some markers around this stuff. So I'll add in all the EMAs and all that so we can see them on a graph afterwards. Add lines to the chart for the EMA. Add line. I'll do this again. We'll go add line. I need to fix something on my computer. Call this EMA slow. And then we want to put in the value. Perfect. And we'll do the same thing with EMA fast. Then we'll do the same thing with the underlying price. I'll move this up a little bit just so we can get that. Okay, so we'll have those so that way we could check, and then we'll also put in markers for when the purchases happened. That will go Add marker by price. Maybe we should rename this to underlying price. Underlying price. Just renaming a few things here, make this a little bit easier to read. By underlying price, and then detail text. I'll go okay, and then we'll add a marker when we sell as well. Yeah, cool. So I've set this up. So next time we run this, we'll have a nice little graph to take a look at. But so far, how are we doing? We're up some amount of money. So we started 25K, it's up to 28K almost. So not too bad so far. Definitely had a bit of a drawdown. We're up to 31, 28. It's moving a lot. It's quite volatile, which is, I guess, to be expected when it comes to options, you know. It's definitely moving a lot.
What's the back testing range here? Is it 6 months or?
Yeah, so we set it to, or I set it to June 1st of 23 until December 30th of 23. So we're doing a 6-month range, the last 6 months of the year. Or I should say out of last year. I'm gonna have to get used to saying 2024 now. Yeah, it looks like it's not in a bullish period. We can speed up this back test if we do like every 5 minutes. Maybe we should do that just to speed it up a little bit and change our sleep time to be our sleep time to be 5 minutes. Just in the interest of back testing speed. Gonna take 10 minutes back test. Okay, so let's buy another option here. Lost a little bit of money. Seems to be bouncing up and down. It's basically just oscillating from like 23 to like 30. Shashir asks, can we do this back testing with a free Polygon account? Yes, you can. It's just going to take you longer. If you back test this here, one thing you have to pay attention to is me at the bottom here. I have Polygon has paid subscription. I set it to true. You're going to have to set yours to false if you want to back test this, right? And it's going to take a bit longer to back test, at least the first time around. The first time around, it'll take a bit longer because it has to download all the data. And then once it's downloaded the data, then it'll run a lot faster, second and third and et cetera times. All right. It's a good question.
Good. Thanks.
Yeah, no problem. Okay. So this is taking a little bit of time to back test. What I'm going to do is, because I now set it to be every 5 minutes, I'm going to restart it because I think it's going to go a lot faster second time around. So I'm going to restart this, and we now will also have those markers and lines to look at. I'm going to restart it, and we'll wait for this thing to back test. Yeah, now we start with 100K instead, so it's a little bit easier to see what's going on. It's easier to read it. Well, much faster this time around. I'm still working on LumiBot to be a little faster with these cache files. I don't know if you guys have been reading this in our Discord. I'm trying to speed up these cache files a bit. It's kind of challenging to do that when, you know, data is sporadic.
Hey, this is Stacey. I have a question. I have been reading it in Discord about the cache files.
Yep.
So when you download the data for the first time, is it cached on the computer somewhere?
Yes, it is. Yeah.
What folder is it cached in?
It goes to, let me show you where it is. And by the way, make sure you have the latest version of LumiBot, because the latest version of LumiBot is going to put in different spots and in a different manner. But this is where it goes. It goes into, there it is. So it goes into your, at least on a Mac, on a Windows, it's a different spot, your username. And then it goes into library, which is a hidden folder.
Okay.
Caches, and then LumiBot, which is down here. LumiBot, and then V1, and then Polygon, or if you're using Theta Data or Yahoo in different spots.
Okay.
Right? But it basically looks like this. Get to here. Looks like this. Right. So users, your username, library, caches, LumiBot, V1, and then you know, whatever service you're using. In this case, Polygon. And we save them as .feather files now because they load very quickly. We used to use them, we used to do CSV files, but feather files load literally like 100 times faster. So we switched over to using feather instead. So it's a little bit of a pain because you can't just double click to open it, but it loads much faster. So well, Brian says, thanks. You're welcome, Brian. No problem.
Okay. So basically, I assume you use the feather files. It's not really used for viewing, but it's just another format. I guess
mean,
it's
you can open them to
the
view
cache.
it. You can open them to view them if you want, right?
Okay.
You probably just want to run a script over it and like convert them to CSV files first or something. Then you can
Right.
open them. Yeah. But Feather is it's a binary format, right?
Right.
So it's much faster than CSV.
Okay.
Yeah, I saw like a pretty significant speed boost when that changed. Okay, so far we're making some good money here. We're 75% in, 76% in, and we're up $163,000, $174,000. That's pretty good, man.
Yeah.
This is a pretty good 209,000, 213. Holy crap, this thing's flying. 207. I'm glad I changed it to 5 minutes. It's moving much faster now. Well, it's not bad. Doubling your money in 6 months. I'll take it. Yeah. I wouldn't mind that. I just wonder how this would work in a downtrending market. I guess it would protect it pretty well
I don't think
because
it,
you're looking for the uptrend, right?
yeah, you'd just be sitting in cash most of your time, I think.
Yeah. I'd want to back this over a longer time period, but this is pretty damn good. I mean, yeah, it's hovering around 200K. 210, 202. Like this thing made some good amount of money, man. Brian asked, no, that I changed the account to start at 100K. Just to make it like easier with the numbers. If you want to start it with a different amount, you could. All you have to do is go into here at the bottom when you're back testing, and set budget equals whatever, right? I had it at 25K before. The reason why I set to 25K was because I was testing this martingale strategy. I was working on it a bit today. Because I'm actually thinking about using this with my own cash, and 25K is the minimum because of the PDT rule, right? So you need to use at least 25K with that strategy, right? That's why I set to 25K, and I'm like, okay, if I were to put in 25K, what would happen, right? That's why it was set to 25K before. But this looks pretty nice, man. And yeah, look at that. When the market was down, it didn't trade. It just sat in cash for a while. And it's when it started trending up again. That's when it started trading. Seems like a pretty solid strategy, Worth.
Over the last 6 months, anyway. Yeah.
Yeah, at least over the past 6 months. Yeah. Let's see, where is this tear sheet? Down on this receipt color. Scatter marker. What? What property is color specified? Requiring color now, I guess. What the hell? This seems like a bit of a okay. I feel like there's some sort of weird bug that's happening when we bought. Okay, well, we didn't get the tear sheet, but we see a pretty big jump here. That's because of this weird bug, which I am going to see if I can figure out what is going on here. So maybe because we didn't include a color. Color equals green. And if that's the case, I have a little bug to fix. Color equals red. I'm going to rerun this and see if that's what it is. I'm going to put a little bug note to fix this to myself. Bug, that's definitely a very nice return. So where would you want to go from here? We still got some time. What else would you want to try out? How can we make this thing better? We could also try over a longer time period.
Could we use the SPY and then trade a leveraged entity?
So you're saying instead of using options, trade a leveraged stock?
Aren't any of the leverage ones having options? Can't we use SPY as the indicator, and then if it is in this particular manner, then use the leverage SPY entity and option of that.
Oh, so you want to buy an option on UPRO as
Yep.
opposed to SPY.
Yep.
Okay. I mean, we could try that. I don't really know how those behave too well. I would think that they're pretty damn expensive. Like if you want to take on more leverage, right? If you want to leverage this thing up more, you could also just buy more out of the money as well, right? Like you don't have to buy right out of the money. You can buy a little bit out of the money, and that way you're doing a leveraged bet that way as well, if you want to do that.
Both good ideas, I think.
Yeah.
But I've looked at the leverage indices indexes. The options on those seem to be thinner and have bigger spreads. But I'd be interested to try it. I mean, give it a shot and see what happens.
Not very hard to try. I mean, like it's quite simple. And then Brian has another idea, is doing a credit spread as opposed to simply buying it outright, which is another good idea. How would you set up the credit spread, Brian? Would you I guess you buy at the underlying and you sell out of the money a bit, or like how do you do that exactly? Or how would you do that? I'll do the option buy symbol because that one's pretty easy. We'll do U Pro. Is that what you mean, Shashir? That you want to do it on U Pro?
Yep.
Like the triple leverage. Okay. Option buy symbol. This is very simple to do. Actually, let me Brian, this is SPY, not SPX. Yeah. Okay, 3 wide bear call credit spread. You got to maybe I got to look it up. I've heard of credit spreads. I don't know exactly how they work. I need to actually look that up. Let me do this one first because this one's fairly simple, and then we can look at doing a credit spread as well. Okay, underlying price. There we go. This worked. Okay, so that's what the bug is. I didn't put in the color. Hey, look at that. 91% in 6 months. I'd say that's a pretty damn good result to me. It is pretty risky though. You can see big drawdown on it. Volatility is also quite high. You could tell just off the graph, like it does move a lot. But yeah, this thing beat the crap out of the market. Like massive beat on the market. 91% versus 13% over the same time period. Again, it's a little bit biased because we're looking at the last 6 months of the year, which we do know we're quite bullish. So I'd want to run this over a longer time period personally. So why don't we start with that? Why don't we start with I'm going to take the tax strategy.
Robert, I was going to say is, I mean, I know this is good because you were, at first you were saying to get higher returns. Triple Q on the last year did 54%. So if you had done this with triple Q, I would imagine probably at least a 200% return.
Oh, probably. Yeah. Yeah, I think you're right. Because triple Q did like double what the SPY did.
Exactly. But
yeah,
just a thought, dude.
Yeah, we could definitely try that as well. That 100%. The only thing that worries me when we do stuff like that though, is we have hindsight bias, right? It's like we knew that happened, right? So it's kind of like back testing porn, right? Like, oh, what if we did this? Like it was like, okay, well, we know it would have done really well. But you know, whenever I do back tests, I try to poke holes in them instead, right? Okay, oh, this worked. Well, what if, you know, how can we break this thing? You know, that's usually the way I look at it, right? Because you're right. Like if we did that, we would have done better. If we had done this on Nvidia, we would have made like a 10,000.
I'm not sure with triple Q though, because the thing is triple Q, since it's all tech, is just essentially indicative of, is tech also just the same thing as going up on like with SPY? And then the thing ends up being like this year, it seems tech A lot of people are moving out of blue chips, right? So we could probably back test it on a year like in 2008 or sorry, something closer, probably like 2019, 2020 when blue chips kind of almost crashed. That would be a good back testing if we were to like try with triple Q.
Yeah, that makes a lot of sense. That makes sense to me.
Okay. Just throwing ideas out there, man.
Yeah, I like it. I like the idea, man. I personally, I own a bunch of the Qs, right? Like I don't tend to own like my portfolio is up like 60% this year. And that's because like I own mostly Qs with you know the stuff that I trade. Actually leveraged versions of Qs. We made quite a bit of money this year. But so I'm fully for it. I prefer investing in the Qs, period, across like all time frames.
Yeah, but you may want to be careful with that coming up in this year because like since blue chips did so well last year, there's a lot of hesitation, and then it kind of seems like it kind of ran out of steam towards the end of the year. Like I was really surprised of December that there was still money pouring into Nvidia, but even if you look at it, Nvidia is still hitting that all-time high and not crossing it, right? Like it's hitting it, not crossing it, and then it may end up coming back down. Same thing with like what was it? There's a bunch of other ones. There's a bunch of other companies that are still that are in tech that are below the all-time highs because they dropped. They because they ended up they're kind of like hitting that all-time high, but if it doesn't break it, then it's gonna come back down, right? And in January is a perfect month of a lot of drop ends up occurring in January. January, February is usually red months. A lot of times, not necessarily just recently, but that's why I was just mentioning that.
Yeah, that makes sense to me. You know, personally, I'm looking to diversify a little bit just because we made so much money, like between mine and all the people that I manage money for, we made so much money the past year on the Qs and on things like that. I actually want to diversify a little bit. I want to buy a little bit of bonds. I want to buy some other things, you know, because I do think that the prices are a little bit stretched to say the least. But there's the other narrative of, you know, okay, fine, Microsoft and Apple and Google, they're all up like crazy, but it's because of this AI play. And if the narrative is right and AI is going to start taking lots of people's jobs, well, then these companies could be the most valuable things on planet Earth, right? Well, they already are, but like by a much larger margin, right? So there's, I guess, that dichotomy, right? It's all about diversifying, you know.
Always diversify, man. You never know. Like crypto seems like right now the market may be going red, and then people, because you also got to remember a lot of it ends up also being on sentiment. So although like the AI play has been well on earnings and essentially mainly in Nvidia, but if that comes down because of restrictions of selling chips or any of that, then you know you could have some major drops. Like what was it? One earnings report that Nvidia was almost at 500 and it dropped all the way up to 430. So I mean, those wild swings like that, and if you got a lot of money invested, those earnings that you had for could end up kind of diminishing to a certain extent.
Yeah.
If you just hold it as opposed to just diversify and try to have I know what you mean. But no, I mean I don't know if the AI play is dead or not. It's just Nvidia hasn't, like, the last earnings report for Nvidia was rough, and then it didn't perform as what it was thought, and then the previous one was the same way. And they were essentially just beating market, but everybody was like not happy because of guidance. And they're like, okay, so where is this AI play gone or whatnot? And yeah, you're right. I mean, like, there's so much stuff that you can do with AI right now, but who's actually making? I mean, yeah, these companies are saying they're going to be making a lot of money, but you know, in the earnings report is where, you know, right now it's kind of like the speculation of it. I don't know if it's and Nvidia, because if they're actually making the chips, but yeah, I mean, an example like Nvidia chips, I think like UAE bought 100 for a lab, one of these $15,000 chips that they sell, and you know how many people are going to purchase that for research and development. If you know, it's they're doing great right now. The question is that going to continue on for another year? And that's where you want to make sure that you're diversified enough that if things, not necessarily that you still are playing, but yet if things don't necessarily leaps, a good way to go about that is also having leaps just in case, you know. So you're gonna end up holding a bag, but
Yeah, so there's different ways to diversify too, by the way. Like one way to diversify is if you follow like this strategy, the condors, it's not directional, right? It doesn't matter if the market's going up or down. It matters whether it's not moving too quickly, right?
correct.
You can make money on the way down, right?
Right.
So actually, I'm working on starting a hedge fund right now. This is why I'm saying some of this stuff, because I'm actually pitching clients on this. But the idea is to have a bunch of strategies that are uncorrelated with each other, right? One of them is this, right? Like the tech play and that sort of thing. And you can do that whole thing, right? But then there's other strategies they could take, for example, buying like condors, right? Condor martingale strategy, or like rolling condors, similar kind of thing in nature, where we're just basically looking that the market isn't moving too much, right? And that can make us a lot of money in both bear and bull markets, right? And then you could find another strategy that works really well with, you know, Forex, right? And Forex, you know, doesn't really follow the way that the typical market moves, right? And you have another strategy for Bitcoin, right? And they tend to be correlated, but not fully correlated with the market. Like, you know what I mean? So like having all these different strategies, that's what I think is the holy grail, right? And that's what I'm very interested in doing. It's nice to have strategies that work well when the market's up. I'm much more interested in strategies that work well when the market's down, right? Because then you have both, right? Ones that work well in down markets, ones that work well in up markets, even ones that work well in sideways markets. You combine all those, and all of a sudden you have a hedge fund that's making a crap load of money no matter what's happening, right?
Exactly.
And
Yeah.
you know, that's kind of the holy grail. That's what I'm really trying to build out right now.
Cool.
In case you care. But, yeah.
No, I find it interesting. Come on, man. We're all traders in here to a certain extent, right? So
Yeah.
yeah, and starting a fund, it's not. Yeah, I mean, it's fun. I mean, it's good money, especially since I mean, you end up charging the administration fee and then a percentage of the earnings, right? So, and if you're making hand over fist, you're good to go. And like you said, yeah, like in a down market, which could happen now because of the recession, CPI is pretty high. Earnings haven't come in for December. Who knows what that looks like, right? And if that looks grim on the economy, and then also now they were saying that they were going to go ahead and roll down the interest rates. You know, there's a lot of play going on that I'm not completely old for this year. Like last, and then you also have an election, right? So you got a lot of stuff, a lot of uncertainty this year that I don't know. But yeah, like what you said, that the more strategies that you have, diversification not only on the actual underlying assets, but also on the patterns that you're using to be able to make money. I got you. No, it's good, man.
Yeah. Yeah, absolutely. Yeah, personally, I think a really good play next year is going to be in bonds. I think bonds are just going to have an amazing year next year.
I agree.
Yeah. You know, like they basically said, like, we are going to lower rates. Like, I mean, that's, you know,
Yeah,
it's like,
that's
to me, it's almost like
that's very
guaranteed, you know, like,
yeah.
just bet on that, you know, like, to me, that seems like
Yeah,
such an
because you're
obvious
gonna get
play.
the percentage return on the bond, and then the principal is probably gonna go up because somebody's gonna want to buy your bond because it's producing 7%. Or I mean,
Right.
I don't know what bonds are at right now, what yields they're pushing out, but yeah, no, definitely, man.
Yeah, absolutely. Yeah, the long end yields have come down quite a bit already. Like I was talking to I was talking to my mom today actually about mortgage rates because my sister, she got into this mortgage, and I feel like she did the complete opposite. Like if she had talked to me, I would have told her completely opposite. But she was in a variable rate mortgage the whole time. Mortgage rates went up, and then she got into a fixed rate mortgage. I'm like, what are you doing? Like, let's do the opposite, like. But luckily, it expires in a year. But we're talking about this because it's like rates are coming down like crazy, and I was telling my mom, I'm like, mortgage rates have come down like 2% in the past like
Month and a half, yeah.
Yeah, it's
Yeah.
insane. It's crazy
insane.
how fast they've fallen, right? And she didn't believe me, so I had to like show her. I'm like, look at this, it's insane, like she's like, well, then why is my mortgage not going down? I'm like, are you in fixed? Like,
You were fixed on when you signed it. Yeah, exactly.
anyways. But yeah, I think next year interest rates are going to be a very interesting play, especially short-term rates. I mean, that's like almost like a given at this point.
Yeah.
Nothing's ever really given in finance, but to me, that's like a pretty high probability bet, and I know some of the like really rich guys, like Druckenmiller was talking about this, and a few others, like some of the billionaires, they're doing plays on like the short-term yields, right? Where they're like basically leveraging like the 5 and the 10 years, right? And so if there's like small movements in the prices, they get like huge outsized returns. I think that's a pretty high probability bet. I'd love to know how to do something like that.
Yeah, so would I, because I mean, it's not a regular ETF. They probably actually end up having to leverage that somehow.
I think they're using futures or something, or swaps.
But swaps ends up being mostly banks, and then if anybody fails on the swap and you're along the chain, I mean, swaps are really nasty. If anybody fails along the chain, that's what 2008 almost collapsed. I don't know. I don't know.
Yeah, but it's swaps on like the Fed, not on like, not on
gotcha.
yeah.
Gotcha.
Yeah.
Gotcha.
Yeah, like the US government's not going to default. It's just going to have inflation. Right? That's the same thing as defaulting.
No, but this year or last year, I don't know. We're still like in next year or whatever. But last year, that's what almost took out a bunch of banks, was because when interest rates started going up, the T-bills started to be worth less. So like $100 T-bill was not selling at 100, it was 98 or 97. So now you're getting a discount on it, right? And then on top of that, the interest rate, like nobody wanted to buy it because the interest rate was really low. So, and a lot of these banks had like a good chunk of their investment in T-bills because they thought, oh no, T-bills are not gonna go down, and they did on rising interest rates, especially when a fast rise interest rate.
Yep.
So, though this will be beneficial for banks for them to start bringing this down, because there's a lot of banks that still hold long-term T-bills at really low rates. And I think they were going to institute, I never heard anything back again about that, but they were going to go ahead and the Federal Reserve was going to allow banks to sell back T-bills that were at an interest rate that was essentially dismal, so that they wouldn't necessarily have to suffer because of the high interest rates, which was like, that was like really weird. I don't know if you heard about that.
I didn't hear about that, but that doesn't sound too crazy given some of the wacky stuff they did in 2008 and
right. This was because of the Silicon Bank failure that they were like, holy cow, because Silicon Bank didn't fail because they were doing anything wacky. They just had a lot of T-bills that they didn't unload, thinking that the Fed was not going to raise rates so fast, and they didn't unload those T-bills, and then they had a cash flow problem. So that's why they ended up having that problem, and with them. And then there was a bank in New York. I forget what the other one. There was a couple of banks that actually failed this last year just because they were holding T-bills, which is insane. Because most banks are going, oh, okay, this is a solid investment. But when the interest rates are at 5%, and you're holding something that barely has 1% on it, nobody's going to want to buy that, right?
Yeah, definitely makes sense.
Anyway,
so getting some results here.
Hey, do you guys still hold that Tuesday nights? Because I know that we have this thing, but do you guys still have a Tuesday night chat and just market chat? That you guys used to have that.
Yeah, we used to have
last-
that. I'm thinking about bringing that back at some point. If you're interested in it, we can definitely start
Yeah,
pushing that
definitely.
again. Yeah,
Definitely, because just to talk about the market and what's going on, because I mean that also helps with some of the strategies where you're gonna apply them. You know what I mean?
absolutely. Yeah, I agree.
Cool.
Yeah, I was thinking about doing that. We just need someone to actually manage it. Like I'm like one person. I can, we need someone to like take the reins of that. So we had a guy was managing it for a while,
Yeah.
but I think I need to like hire someone or something like that to like officially run it. Because I personally just don't have enough
You
time
don't have
to
enough time.
Yeah. But okay, so here we got a result of this, right? So I took it back to mid 2022, and this is what we got. Right. So how does that compare? So here's from June 23 to then June
Oh,
23 to then. So that's that big gain here. But there's this big loss that happened on this time period. Like this is pretty ugly. Right? Because
very.
we had a bear market. It just got slammed really hard. Right? It got slammed really hard in the bear market. And then it lost a bunch here. Exited for a while, which was smart. Made some money on the uptrend, which is good. And then somehow, I don't know why I got burned. I guess I got burned here because we had this down market. So maybe, yeah. And then I don't know how it got burned on the way up here. I guess this is maybe because volatility was dropping or something. Yeah, we got burned pretty bad over this time period here. The second half of this year was really good, but the year before that was not very good for the strategy. So that's buying calls on the SPY, and then here's buying calls on UPRO, right? So Shashir, this is what you were asking for, and it did a little better, right? So here is calls on the SPY. We did 91%, 91% max drawdown of 30. Here's calls on the UPRO, 113%. Drawdown is only 32. It's actually quite a bit better. Wow, that's surprising. I wouldn't have expected that. Apparently buying calls from the U Pro is a better idea. Not only in terms of returns, but in terms of risk as well somehow. Okay. All right, where do you guys want to go for here?
And these are all market buys, right?
Yeah, they're all market buys. Yes, we're not placing any limit orders anywhere here.
But Robert, you didn't test the same U Pro with the 2020 like you did with the SPY.
Yeah,
Where we got burned.
I'll do that now. I'll go back to 2022 as well with the U Pro. We'll see how that compares.
Yeah, because that is like a 60% loss in a year. That's not really good.
Yeah, that's quite scary. But there's a bunch of ways that we can get around that, right? So one way I think we can deal with that, and I really liked the idea that we had here from Brian, where we could do a credit spread as opposed to simply buying the call, right? Which is going to limit our losses. We do a credit spread, right? So call credit spread.
Yeah, you're just gonna buy. You could just buy it by $1 or $2 out of the money. I don't know how many, because then you're gonna have to have a gap of how much do you want to the call that you're gonna sell, right?
Right.
That call that you're gonna sell, do you want to be $1, $2, $3, $5 out of where the one that you're buying, right?
Right.
So, and then when you close it, then you got to buy back the call that you sold, and then sell the one that you have bought.
Right. So I'm wondering here. So Brian, are you still here? I think Brian actually left. He had to take off somewhere, but I do like the idea because this will significantly reduce our downside risk.
Yeah,
Right.
definitely.
So I'm not super familiar with credit spreads, although they don't seem like they're that complicated in general. There's, yeah, I guess there's this credit spread, put credit spread or bear credit spread.
You're just selling a call further out of the money than what you bought it.
Right, like that's just what it is, right? I'm buying a call and then selling one a little further out of the money. That's it, right?
Correct.
Yeah.
Yeah.
And then you could probably put that as a parameter, the gap between the one that you buy and the one that you sell. So you could make it $2, $5, whatnot. You see what I'm saying?
Right. Yeah.
As a parameter, and then that's your spread right there.
Okay. Yeah, and it's buying at the money and then selling it out of the money.
Correct.
Right.
I mean, you could even have that you buy out of money and sell out of money, because you're going to be higher leveraged. It doesn't necessarily have to be exactly in the money, but let's not complicate it. Let's keep it simple, right? So yeah, just buy in the money and then sell out of money, and then just have a parameter for the gap of the spread.
Yeah, because I guess what we want to do is we want to limit our downside, right? Because we're getting whacked pretty hard on this downside here. So what I'd like to do is actually, we could even just back test from January 23 up until the end of the year, back test that 1 year, and that should be pretty telling for the whole year, right? So
But you may still have a 20% drop in that. Even if you do 2023 from January, you may still have a 20% drop. So you still have a well for the year, as opposed to at least a 20% gain. So it's a gap of 40%.
yeah, so what I'm looking at here, so this is a bear call spread. So to me, what this actually looks like, and again, I'm not a credit spread person, but this makes sense to me, a debit call spread, where essentially you'll sell a call at the money, and then you'll buy a call in the money. I'm sorry, how do we go here? So we want to chop off the losses, right? So if we,
It's the same thing we were saying earlier. If you buy at the money and then sell out of money, or right,
Yeah.
like you sell in the money,
because you're
right? Because you want to sell in the money, because like which direction is it, right? So
yeah,
let's say here's your call, right? And this is, price goes up this way, price goes down this way. If we sell this, we immediately make money right away, right? So we immediately make cash right now. And then we buy down here to chop off the losses. But I guess this is selling a put, though. In this case, we're selling a put, and then we're buying the put. Right? This would be with puts, it wouldn't be with calls. Am I thinking about that correctly? Someone who knows options better than I do.
Yeah, if you do a put spread, that you're selling in the money, and then selling in the money, and then buying out of the money. Yeah, it's the inverse with calls and with puts.
Yeah.
But the thing is I thought that we were saying that overnight, usually the calls end up going up, right? So we're inverting what our original premise was. So if we want to just do the call spreads to limit the downside, we could actually buy within the money and sell within the money to limit even exposure. But then you're also going to limit your gains. But to keep it easy, what we could do is you could just buy in the money and sell out of the money call, and have a parameter that's, let's say, $2 or $3 that ends up being your spread, that essentially just adds what you just bought, and then that's going to be the call that you're going to sell, right? So like if I bought a 450 call, and then now I'm going to go ahead and sell the 453 call. And then in case it does drop to 452 or it doesn't move up, it goes down, I keep what I had out of the 450. 453 is still going to be worth something. And then the 450 is obviously we're going to be worth less, but you're not exposed to that complete drop. You see what I'm saying?
Well, I don't think that would happen if I sold a call, right? Because if I sold a call, I'm still going to be liable for, like basically I'm leveraging myself. If I buy a call and then I sell one out of the money, I'm basically just taking on more leverage, right? I'm just using less money to buy that call.
Correct.
Right?
But if it goes down on you, like let's say let's keep numbers easy, 450 and 455, right? Let's say for some odd reason you were expecting the 450 to become 452, right? But instead it went to 448. Let's say that call spread cost you, I don't know, $2 or something like that. But now since you sold a 455 and that 455 may no longer be 50 cents, now it might be 5 cents, right? You don't end up as with as much exposure, and your whatever you paid for the 450, you're going to have a less loss. Now you're also going to limit your upside to only $5, but overnight, I don't know what the probability
loss is going to be less because I invested less money.
Yeah, you invested less money, and then when you sold it, you probably got less. Well, when you sell it, you're not necessarily going to have. You don't have that all the way the unlimited upside, but you don't care, right? And then you could just have a parameter that says, hey, I want 2 or 3 or 4 or $5 out of the money. Because if you keep it tighter, you're probably going to be able to make more money. So like if you have like only like $2 as a parameter of the one that you sell, that could keep it a little bit tighter, and that would reduce your losses quite a bit.
Yeah, that makes sense. Okay, so we'll say call sell. What would be the parameter for this? We'd say call sell.
You could put call spread or call spread and then give it a number. Okay. And then that one that you're going to sell is going to be your call plus your call spread. That's going to be the one that you sell.
Okay.
So like you could say call spread and $2 to just give you a simple one, because I don't think sometimes I've seen SPY jump $5. I mean, I don't know, maybe 5. To keep it easy, I would say $2 because that's going to limit a lot of those weird losses that are in there.
Yeah, $100 to sell the call.
And then now when you buy the call, then you have to also sell the call, and then when you sell your call, you have to rebuy back the call that you had sold.
Okay, so we'll do this here. So this is buying this, and then we'll do just the same amount of contracts. So we'll go like this. Call spread. Okay, so if call spread is not none, create the option asset.
Yeah.
Strike plus, right? Sell. Wow, AI is awesome. It's amazing.
No way, dude. What are you using that did that?
It literally just wrote all that code for me. That's amazing.
Yeah, but what are you using? What are you using?
It's GitHub Copilot is what it's called.
GitHub Copilot?
Copilot, yeah.
Yeah. Oh, okay, but you don't use PyCharm. What is the Microsoft deal that you use? I forget what is the
VS Code I use.
What is it?
VS Code, Visual Studio Code.
Yeah, Visual Studio Code. Okay, I'm gonna get that, dude. This guy just wrote itself like nothing, man.
Yeah, it literally just wrote all the code. That's amazing.
You knew what you were
It's
trying to do.
actually very accurate. It's amazing. Like, holy crap. Yeah, look at that. It like reversed everything. It did. Yeah, this is right. Call, add the spread, and then get the price, which actually doesn't need the price. We can delete that. It's not necessary. But then basically here it creates the cell. Yeah, there you go. It's good. Good to go.
You
And then
you still got to do when you sell it, but when you go close it out, you got to buy it back.
yeah, exactly. That's what I'm about to do in a second.
You gotta yeah. Don't forget when you close it out, you gotta buy that back.
Yeah. So we'll go side. Determine side. Side equals call if no side equals sell if position is greater than 0, else buy. That's our side. And we have to do absolute of the quantity. Go order position quantity. We'll say side. Yes. Okay, cool. Okay, and I guess we could do this either on UPro or on Spy. UPro seemed to work better before, right? So we could see what happened with that. What happens with that? Let's run this. Let's see if this does it properly. Okay, so let's see. Running. So we got a back test that came up there. This was actually up.
Look at that.
I don't know what this is for though. This is 2022. I think this is on UPro.
No, that's the strategy on UPro. Oh, because you're comparing the Spy to that. Look at that.
Yeah.
A gain of 100% on a down market.
Yeah, that's pretty amazing. I think this is literally the exact same thing we did before, just on UPro as opposed to Spy. I think so. I think that's the only thing that changed.
Yeah, this was from 2022 to 2023.
Yeah, but it's 2022 though, which is that was the year that it was
Yeah, this
essentially
one
like
got killed, right? This one, the other one got killed.
Why
yeah,
such a
the other one got destroyed.
Yeah.
Went from
This
a
one-
60% loss to yeah, look at that. Look at the comparison on that.
a big difference.
That's the way to do it.
So I guess
at
you
that.
probably a better idea. That's surprising me.
Dude, look at that. That's beautiful, man. That's such a nice yeah, that's a good one. That's a
Yeah,
real
it's
good.
amazing. A drawdown only of 36% on so much leverage. That's crazy, man. I would have never expected that.
And you got 100% within a year.
Yeah. Well, a little less, a little bit more than a year and a half.
Close to 100%. There was a couple of downturns in that you could probably. I mean, now it's a matter of tweaking it a little bit slowly, but I mean that's
pretty impressive.
day and night, man.
Yeah. I like that. Okay, and here's so let's try this with the spread. It's 39. So the original strike price. So the original option was at a 37. And then we're selling the one at a 39. So by a 2. So it's going to cap our gains, but should also really reduce our losses a lot. Okay, so in this case, side sell, this quantity is positive, okay. And the other one quantity is negative, so side is buy. Okay, good. Okay, so here's what the spread. And by the way, if you guys are using this code, you guys want to mess around with it, you can just put call spread to none, and it won't do the call spread. It will just do like the naked buying of calls. This is interesting. I wonder how much of it is holding overnight. You know, like how big of a factor is that? You know, is it overnight or is it, you know, like there's a lot of details to that. Because we have this other martingale or this condor strategy that we hold overnight, and that does really well when we're selling, right? So I wonder if it actually makes more sense to sell the call overnight or sell a put overnight, I should say, and hold it because the drop in volatility should be pretty significant, right? I would think that could actually be a pretty interesting thing to do too.
That's another good one. Yeah, selling puts. But the thing ends up being is that you kind of almost want to have it like maybe a put spread, because if not, you are, if anything major drops, then like if you have a 5 or 10% drop, I mean you could be
yeah you definitely want to do a spread. Yeah, 100%. I wouldn't just go naked.
Don't do it naked. Have it a little bit.
That sounds pretty scary to me. Yeah, I agree with that. Yeah, I would definitely want to have a spread.
It's pretty tough to get permissions to sell naked anyway.
Yeah, it's true.
Yeah, that's true. Yeah, you definitely have to have a large account.
Yeah, because they're not stupid. They know you could blow up your account in like 2 seconds. Yeah. Yeah.
No longer a customer, and you owe us money.
Yeah, exactly. Yeah, this is a scary thing about selling some options. There's like unlimited losses in some cases.
Exactly. Yeah, even with naked calls, people are like, "Oh, okay, I'm just gonna sell this." I'm like, dude, if you're out there and for some odd reason it pops overnight, you're liable for all that.
Yeah.
And if it's going up, they're gonna do a what is it? A margin call on you, and automatically pull some of that stuff out, close all your positions out. So like, nah, that's some of that stuff is. I try to be careful with naked sales.
Yeah,
Actually,
absolutely.
I really don't think I've done them, just because the risk reward is not, to me. I don't know. It's not there.
Yeah, makes sense. Yeah, but I don't know. I mean, most strategies that we've been doing with options lately, it seems like selling options just makes you more money. Like I've seen that seems like a pretty consistent thing.
It does. I think it does make you more money, but you got to remember you're risking. If it goes against you, you gotta liquidate quick. And if you hold it overnight, you can't do anything, right? So this strategy we're holding overnight. So like if SPY for some reason either pops or drops, yeah, I don't know, $10, and maybe that's 1,000% of whatever you put in there, whatever you got from them, right? Let's say you got $1,000 and now you got to return back 10 grand, right? That's or if you did 100K, now where's the mill? And that's overnight. That's a rough one. It's a rough one. I know you could make a lot of money you could make more selling it because you're essentially selling insurance, but you're still liable for the insurance, right? I mean,
yeah, but that's why you do it as a spread. That's why you don't take the full amount of the risk, right?
Full unload, no, because people are wanting to buy that, especially a lot of hedge funds like to buy not spreads, but like to buy certain calls or or puts also just for leverage their equity so that they don't end up having losses on particular positions, right? So they don't want to sell the stocks. They go and buy insurance using the options.
Right.
But yeah, you're still liable for that. So like, yeah, I don't. Yeah. To me, it's like playing Russian roulette. I'm good.
Yeah, definitely. It's strange going on here. The price isn't really. Oh, now it actually bought something. Okay, finally. This didn't buy anything for like the longest time.
Well, I don't know if that's a good thing then, because I mean there were some major losses on last time at
Yeah.
60. But here's the thing, from what I'm looking at is it's at 80. I thought I just saw 80K.
Yeah, it was 85. So this one's down.
85. So I mean, it's better than the 60% loss that it was back then, but it's still not.
Yeah, but
Still
this is close to the end. The other one was up a lot by this point, and it still dropped down to 80, so it didn't really protect from this
No, I
major
think
loss.
that Ultra Pro was U Pro was that one was helped out a lot as opposed
Yeah.
to.
This is also a new pro.
Oh, this is also U Pro with a
Yeah, this
spread.
is also U pro. Yeah. Yeah, options buy symbols U pro.
So what happened? It's probably because we're limiting our upside.
I think that's what it is. I think that's the problem here is that we took a pretty big whack to the downside, but we're limiting our upside.
Correct. So
Yeah,
that
like
number two,
it's
you
never
probably
recovered from that. Yeah.
change
What
it
we
to
didn't even save it. We didn't even protect it much. It dropped almost just as much. I bet you when this comes out, we'll see a drawdown. It's almost exactly the same as without it. So
I think
I mean,
without it was actually better.
yeah,
Because we limited our upside and we're not limiting our downside. So
yeah,
for limiting the downside, we may have to do like a condor or something like that, which you already have the strategy for, right?
yeah. We have condors. That's a different thing though, right? That's not directional. This is directional.
Right. No. But I'm saying is in a condor, what happens is that you also do a put spread. A condor is essentially a call spread with a put spread.
Right. It's both combined. Yeah.
It's both combined. So essentially what you would be doing is adding the put spread. So when you have like this loss, your put spread section of the condor would be capturing you would be getting money coming in because of your call loss.
Mm-hmm.
Right. So because of that, now you're making money even when it's going down because of your other side of the condor, right? So as long as it stays within that. Oh man, look at that.
This is more accurate. So it lost, and it was just flat.
That
I don't know
looks
why
like
it was
a
flat.
rough year, man. That looks like a really rough year, man. Holy cow.
I don't know why it was flat this whole time though, because the other one is using the same signal.
You should have purchased it. Why didn't
Using
it
the
purchase
exact
it?
same signal. Yeah, it should have been buying last time. I don't know why it wasn't buying. That's actually very odd. What the heck was going on? Yeah, the other one, yeah, look, throughout the year it was just buying.
Right.
It would have been buying throughout here. There's something wrong with the signal.
Yeah, but you didn't change the signal. You just said
Yeah,
using
I
it.
didn't change anything about the signal. I think it might have something to do with this this whole thing of own option, right? We will own an option if position and position, sell, something along those lines is broken. I'm gonna rerun this. I think there's some sort of bug in here. This doesn't seem right to me.
Yeah, it spent all year just sitting there. That's not. That's
Yeah,
not
that
good.
doesn't make any sense. Like, and I know that it crossed because it crossed for all these other ones. Like
Exactly.
it was in the market for all these other ones. So, and we didn't change the signal. So there's something else at work here. There's some sort of bug that happened. I think it has something to do with this own option equals false thing.
Oh, because you're checking to see if you already sold the option.
Yeah, I think there's something weird about that mechanism going on. So
Yeah, because it doesn't seem like it's doing a lot of buying into. There we go.
yeah,
Okay.
else.
I think this is the gap that we had before. No.
It's gonna hit in a second. So I'm here. So I would say it's probably somewhere around like 10-15% is when it started to screw up.
Only thing I could tend to think of would be that why that it thinks that you still have the option.
Oh, you know what? It might be because it couldn't find option contracts for U Pro. Couldn't find option contracts.
Oh, because of the yeah.
Maybe because it's
That's
just so
good.
thinly traded. It's possible. Let's see. Okay, so here it's hit that period where nothing's happening. So let's see what's going on here. So not own option. We go to here. Is bullish. Is bullish false. So it keeps going through that. Is bullish false. Is bullish false. It shouldn't be the whole way through though. There's got to be something else at play here.
So if we've got a $2 spread, the U Pro might not, that $2 spread might not exist. We might have to go every $5 on it. I haven't checked, but that could be the problem.
Maybe. That's possible. I didn't notice it crashing, but that is a possibility. Yeah, something's going on here. It's not even getting down to this. Yeah, something's happening here. Time to buy. 14, 15. So keep going. Yeah, it's stuck somewhere. There's something wrong here. Definitely something wrong. So it's not even getting into here. It's not even getting into here. So own option. If own option false. So it would never go into that. So it goes over to here. Date is greater than time to buy, which is 355.
U Pro does have $1 increments in between options and sometimes 50 cents, so you should be good there.
There's something to do with this about 5-minute thing that I set up. Fourteen. I just skipped right over it. I think it's a weird thing with the timing. So what I'm gonna do is I'm just gonna make it time to buy. It's by 10 minutes before it closes. I'll just be a little safer. All right, I'm gonna rerun that. Have a good one, Alex. Yeah, I think the time is what was causing that problem. It says minutes before closing, 1 minute, and then I think I was just getting stuck in this weird loop. So if we just buy it 10 minutes before closing and we run it every 5 minutes, then it's more likely to hit that time, if you know what I mean by that.
It's much better
Yeah.
because it might just be something in the close that is just not buying it.
Yeah, I think it's just like a timing thing. It's just like it was hitting 354 or something like that, or it was off by like a second or something stupid like that. And then it tried to do it again at close, but then it's 1 minute before market close and it does this whole thing. It's got stuck in like this cycle. If I'm right, then this should work now. Yeah, but I don't know. I'm thinking that maybe like selling puts would probably make more sense. Like selling puts and then buying a put, in the money. So that way we're like constantly making a profit. Like we have like a fixed profit that we're making. But then whenever we lose, it's like a fixed loss, right? Like you're not getting like a big hit. Right.
Yeah, the only thing then I don't know if you want to adjust your triggers because we're kind of I mean the triggers were we thought that it would just be more on hey, it seems like this is being bullish. So to do a put spread, I mean, yeah, I mean that could make sense because now you're going to be able to sell that put higher towards a
Right.
close. That yeah, that could work. The only thing is the put that you buy would be out of the money, and then the one that you would sell would be in the money.
Yeah, exactly.
Or I mean,
Or opposite. Yeah.
yeah, it would be the opposite. So
Yeah. Sell it in the money and then buy it out of the money.
you can buy it out of the money. Yeah.
This is stuck again. There's some weird thing happening here. It's stuck again. I don't know why the hell it's stuck again. What is going on? Something unusual happening here. It's like skipping over this entire time period.
It could be that the response back from, I mean, I don't want to say network. Maybe they're doing updates at night over in Polygon.
No. That has nothing to do with it. This is all local.
Okay.
The date time 9:55. Let's keep going. It is now noon. Gone. This is now 1:45. $8:30. Oh, I know what's going on. This is really annoying. It's daylight savings time. That's just throwing this stupid thing off.
Holy cow. That makes
Yeah,
sense.
oh my God, that's really annoying. I've seen this before. That's why this is because it's saying 8:30 a.m. and that's why it's like it never passes that time to close thing.
Just trying to trade after hours. Or before hours, sorry.
No, we just have to make an adjustment for daylight savings.
But I wonder why it wasn't happening for the other ones.
Yeah, it was like a whole thing. It was like, what the hell? Like this whole thing. And the reason why is because it's in daylight savings time. That's why. That's so stupid. Okay. Adjust the time to be correct time zone, including New York. This so where does it start to drop off? So when is daylight savings time? It's that's such a stupid thing. It was March. What happened? March 12th. So let's do March 12th. And let's see if it that's why it completely skipped over. I'm like, what the hell's going on? $9:30. Did I do the other one the same thing? So we did this with the Condor as well. So I'm just wondering if I have to do the same thing. Yeah, I did the same thing. Convert to New York time. That's exactly what it was. Okay, so now this should work. That's such a stupid thing. I thought we had a default to be New York time. I don't know why it's not doing that. I could swear that we had it the default be New York time. I'm gonna take a look into that because it's a little detail, but it's gonna make life easier. Yeah, so let this run. Okay, we'll see how this turns out, and then I don't know about you guys, but I'm starting to personally crash a little bit. We can try doing this in another session where we could try doing this with like puts as well. There's a bunch of different things we could try out here. Because I don't think the signal is too bad. I mean, we could test the signal on its own. That'd be an interesting thing to check, right? Is it a good signal? Because what if we like maybe we don't even need that signal. Maybe we just do like a call spread every day, right? Like regardless of what the signal says, right? Although it seems like it does tend to save us from this pretty bad situation. Definitely saves us from that, which is really good. Saved us a bit from this, I guess. Here it saved us from that. I mean, I guess it seems like a pretty good signal, actually. Yeah, it saved us from that. I guess it stopped us from getting that gain. But it's not too bad.
Are these all still on the 9 and 18-day moving averages?
Yes, yeah. So we haven't changed that at all.
I wonder if playing with those helps. I don't
Yeah,
know.
I'm sure it'd make a difference. There's a lot of moving parts here. Right? Like you could change like the spread, you could change the amount of bullish days that are required. You change the days to expiry, right? Change the EMAs, change the symbols. There's a lot they could adjust here and play with. I mean, you guys can get the code, so you can mess around with it as much as you want, right?
If you guys find something that works better, if you could share it in the chat, that'd be great.
Absolutely, yeah. Okay, now it's actually trading during these times. That makes sense. All right, stupid daylight savings time. Because that was a good time to be apart too. This was like a really good time to make money. You know, like this had made good money, but this is also like, look at that, it's giant bull market, you know. Yeah, there you go. Now it's going through that. It's gaining some cash. I lost a bit at the beginning. Yeah, but I mean, again, I think the spread needs to go a different direction because in this case, it doesn't really limit our loss, right? Like selling that extra call doesn't really limit our loss. It provides us kind of like with more leverage, but doesn't like chop our losses off, right? So we can still have these pretty big downs, right? Like this is still happening here, right? We're still seeing these big losses, but that's what we want to prevent. We want to prevent these big losses. So how about I'll put together one more thing and then maybe we'll call it a night after this. But I'll do basically options overnight. We'll call it put spread. Options over overnight put spread dot pi. It'll basically be the same thing. Except we'll take this and we'll just trade it slightly different. Okay, and now instead of, we'll keep everything else the same. It's just when we create these options, the right is going to be a put, and we're going to sell it. Sell. Now I'll be seeking, yeah, so seeking the days, that makes sense. We're going to sell a put, but we probably don't want to sell it right at the money. Right, so we probably want to sell. Yeah, actually, how about we sell a put at the money and then we buy it slightly out of the money. So sell it. Call spread, we'll call this. Put spread. And now instead of this, we'll strike minus, right? Because when we subtract, it goes more in the money. Oh, wait. Does that make sense? Because the higher up the put, the more in the money you are. So we won't go out of the money. Yeah, so we just flip that. That sounds right to me. We'll sell, and then this is buy. And this doesn't really matter. It's reverses it anyways. Doesn't really matter which way you put it. I think this should do what we're expecting it to do. Okay, so far the call spread is doing better now too. This one's actually up quite a bit of money. Wonder how bad it got. Went down to, yeah, it didn't really chop off the losses, right? Like we still had a pretty big drawdown. I bet you if we went back even further to the year before, we would have gotten whacked even harder. Let's see how this one does with the puts. Yeah, so lower down you go on the put. There's some selling this and then buying this. So far, the put spread is doing pretty well. Started off quite nicely. It's not really getting whacked by that downturn so bad. This is actually working out quite a bit better so far, this put spread. Look at that. It hasn't really experienced a big downturn yet. Unless I screwed up something with how it's buying it, but this is looking a lot better so far. You know, while this back test, I'll be right back, guys. I'm just gonna use the bathroom, all right? Be right back.
Sounds good, Robert.
But so far, this put spread's looking like a good idea, man. Like you see these numbers, like it's 122. It never really dropped, and it never really got hit at all. Like
Yeah,
it went up, dipped a little bit, but you know, unless I screwed something up with how I'm buying and selling it, but it seems like this is a much better idea so far. Anyways, I'll be right back. All right, hey guys. So this looks pretty good. Had a decent drawdown, but it's quite up, it's up a lot. Up 109%, 30% drawdown for 109% return. I'd say that's pretty damn good, I guess the question is how this would have behaved over like a COVID or something like that. But it's a fairly long bear market that it went through, and it still did pretty well. So that's the call spread. Let's see what the put spread looks like. So the numbers seem to be even better with that, or at least had lower drawdown. Wait a few more minutes on that one. This looks like a pretty interesting strategy, no? Like I'd put some money behind this.
I'm happy with the results.
Yeah. It's pretty volatile. The Sharpe ratio doesn't look very good based off of that. I was speaking to someone the other day, and he was saying he cares a lot more about the Sortino ratio than he cares about the Sharpe ratio, which I'm not entirely sure what the exact difference is. I think the Sortino like only pays attention to downside risk. And the Sortino is quite a bit better versus the SPY. If we look at some of these other ones, Sortino is pretty crap. This is not even real. That's just not set up properly. Yeah, the only thing is you get this big dip here, right? That's like the market wasn't even really flat. Like it wasn't even in a bear market around that time. It was kind of flat, It's weird that I got hit so hard around here. Jorge says, can't talk. Wow, much better with the put spread. This isn't the put spread. This is the call spread so far. This is the call spread just without that missing thing due to daylight savings time. This is probably label these a little better. From June, January. I'm really wondering what the put spread turns out like. It's not up as much. Put spread actually is not. It seemed like it didn't lose as much, but it's actually not making that much either. Up 22% over in this past year. That's not like that exceptional. And maybe we just set it up wrong or something. It's a good chance to set it up wrong. Yeah, no problem, Jorge. Yeah, I might have set up these puts incorrectly. This is very unusual. This is some really weird looking behavior. What the heck is going on here? This just seems all over the place. I don't even know how to make sense of this. This giant drawdowns. I don't know if this is any better. I have a feeling I didn't set up the put spread correctly though. We can delve deeper into that, but I don't know. Okay, but I think this is a pretty interesting one. I'll at least give this one a go. Like I wouldn't mind trying this one. This is the overnight calls, right? Like I'll back test this over a longer time period. Let's see how this thing does going back to like 2020, right?
Yeah, that'd be great because I only have options data for 2 years.
Yeah, I'll back test it going back further. We'll see how that works out. And I think this should work because we had the dailies not until last year, like 2023. I think it's when the dailies came up. This one is the algorithm's smart enough to like seek for the next available day, no matter what. I think that should be good. Okay. So I'll run this over a longer time period and see how it does. Like this is a full cycle, right? This is like, you know, huge crash, big jump, then bear market, and then huge bull market, you know, like this is full spectrum, I think, right? Like
Yeah,
if it does well since 2020, I'm pretty confident in this one personally.
that would be a pretty scientific back test, I think.
Yeah, like you've seen a lot of stuff. The past 4 years have been crazy in the markets, if you think about it. Like you can see pretty much all kind of like crash, bull market, bear market, you know, the whole spectrum. Okay, so I'll run this. I'll let you guys know how it turns out. But I mean, this is pretty good, right? Like I like this, you know, it's very directional, right? But I think it's very interesting. I think this makes a lot of sense doing this.
Yeah, I think it's a great start on something really good here.
Yeah, 100%. Cool, man. Good idea, Worth. It all started with you, man.
Hey, nice coding. Thanks everybody for the ideas on the how to adjust things as well.
Absolutely. I agree with that. And yeah, we'll finish up for tonight. Again, if you guys want to be part of this every week, join our pro plan, join our all access plan. They're 30% off right now because it's New Year's special. So if you guys want to get 30% off, you can join now for a lot cheaper. And you can get this code. You can literally run this code that we made today. So if you join any of these plans. So just go to website, pro plan or all access plan, sign up for one of them, get that 30% off. It's not 30% off 1 month, it's for every single month. So pretty good savings right now. But all right, cool guys. It's been a pleasure. Have a good night.
Have a good one, guys. Thanks a lot.
Good night, guys.
Thanks, Robert. Good night.
Thank you. Bye.